Okay, it's 1 o'clock now, so we will get started. Just a quick check to make sure that everyone can see us and hear us. If you can raise your hand to let me know that you're able to do that. Oh, great! Lots of hands raised. Thank you very much. This webinar is being recorded, and we will make it available online on Careers in Oil and Gas later this week. And it will be sent out to participants hopefully later today, depending on how productive I am. I would like to start by acknowledging that we live, work, and play on the traditional territories of the Treaty 7 nations, the Piikani, Siksika, Kainai, Stoney Nakoda, and Tsuut'ina First Nations. We acknowledge the ancestral territory of the Siksika Sitapi, the Blackfoot Confederacy, and the home of Métis Region Number 3. This project is funded by the Government of Canada's Sectoral Initiatives Program, and opinions shared in this webinar are Petrol MI's and do not necessarily reflect the Government of Canada's. We welcome you to share any of the content from today's session with your networks. However, you cannot charge for this information and you must reference us as the source. So, this research and content that we're sharing today is created and developed with the support of many other organizations. So we have listed them out here for you to read through. I am Brianne O'Reilly. I'm the program manager for Petrol MI, and I'm here virtually with Lisette Cameron, our analyst. Bimal Mehta is also joining us. Bimal is Managing Director of Energy Intelligence at JWN Energy and Geologic Systems. Bimal leads the group's efforts in the areas of business intelligence and strategic insight. He has over 25 years experience developing analytical insights across multiple industries, including energy and technology. JWN recently merged with Geologic Systems, and the combined team has extensive databases to drive insights for both Canadian and global energy intelligence. So just to give you a bit of an overview of what we're going to be talking about today, I'll go through a little bit about us and our methodology and scope that we use to develop the labor market outlook. Bimal will be sharing a little bit about the outlook scenario. Lisette will be going through the industry outlook overview, and then we'll be getting into the conclusion and navigating the outlook online. We will open it up for Q&A throughout the session, so you can ask questions as we go, and we will have time dedicated at the end to answer those. So Petrol MI is a division of Energy Safety Canada and has a mandate to collaborate with industry, government, educators, and training agencies to support and advance the development of a sustainable and skilled and productive workforce. We specialize in oil and gas labor market data and insights, as well as resources for workforce and career planning. So I'll go through a bit of our methodology and scope right away here. So while I talk about our methodology, I'll take a minute to ask a little bit more about who we have on the call. So our outlook is produced using a modeling system developed in 2006 and continuously refined. The model produces labor demand projections for direct employment in the following subsectors: exploration and production, which is the finding, extracting, and producing of onshore and offshore conventional and unconventional reserves, except for oil sands. Oil sands, which includes extracting, producing, and upgrading of bitumen, specifically within mining in situ and the upgrading operations. Pipelines, which is the storage and mainline transmission of oil and gas. Oil and gas services, which is the contracted exploration, extraction, and production services to oil sands and exploration and production companies. So that includes drilling and completions, geophysical and seismic, and oil field services. So sectors such as downstream construction, manufacturing, LNG construction, truck transportation, and professional services are not included in our scope. And we use these employment drivers to identify workforce levels required based on capital and operating spending forecast and production forecasts. Thanks so much for answering the poll, and I will turn it over to Bimal to share a little bit more about our assumptions for the forecasts.
Great. Well, thank you, Rianne. And first of all, just wanted to thank the Petro LMI team. We were thrilled when we were asked to come and join and participate in this forecast. And I think one of the things that we found was, I think if you look at the last year, think of the number of times we've heard someone say this is unprecedented, this is new, we're in different territory. And this was the context in which we got a chance to work with Petro LMI, which is the world's never seen this kind of pandemic that's affected every corner of the planet. One of the first areas that we saw kind of see these impacts were incredibly fast drop in demand as people were asked to stop driving, stop flying. If we just think back a year ago, a year ago plus, 1 or 2 weeks, and we were in the midst of a full-on April lockdown. No one was going anywhere, no flights, and world oil and gas demand virtually collapsed. So typically in a given year, world oil demand is about 101 million barrels a day. This was what it was January of 2020. And by the low point in April and early May, we were down to somewhere around 75, 80 million barrels a day. And, that incredible drop led to things like negative oil prices in May and the ups and downs associated with the industry. And it's in this light that we were starting to look at this forecast towards the latter part of this year and the beginning part of 2021. And, we're in an environment where there's vaccines. Many of us have already had our vaccines, and some of us still have to go. We're starting to see the light at the end of the tunnel. I think what we found, though, was that it's going to be a pretty long tunnel. World oil demand right now is somewhere around 95 million barrels a day. And the view is that it won't reach pre-pandemic levels till early 2023. And it was in this context in which this forecast for capital, operating expenditure, and production were sort of developed. We're looking at the last 5 or 6% of global oil demand will take some time to work back. If you think about it, a lot of our driving habits are back worldwide, but we're still in a situation where there's not a lot of flight activity. And, we're also seeing places where we're going back into, our third wave, and those things result in further lockdowns, further delays. So in this context, we worked with Petro LMI, looked at company-related data, and we talked with the industry to get a sense as to where things were going to head for 2021 through 2023. And the key underlying theme is that, the worst of it was behind us, and we're starting to see a bounce back and some recovery in demand. And it's showing up already with respect to commodity prices and just overall share prices for oil and gas companies. I think what's important to keep in mind, though, is just because the share prices and those prices of oil and gas have popped so much, it may not necessarily mean an immediate jump to new investment. Some of the things that we saw and heard which influenced the forecast was we're not out of the pandemic, particularly air travel. And companies are looking at this very, very cautiously. Key themes that every company has almost put out has been around capital discipline, making sure that they're spending wisely, they're spending only what they have to. We're seeing industry consolidation unfold, and we've seen some big deals like the acquisition of Husky by Cenovus. There's been many others that almost make the headlines, and there's more to come. We're forecasting that there'll be continuing industry consolidation through this year. And just an overall focus on discipline. Shareholders are now demanding returns, and a lot more of the activity is going into, if you've got free cash flow, can you put it against debt reduction, or can you put it against share buybacks? But not a lot of companies announcing that with prices coming back a little bit, they want to get back out there and start investing like they did pre-pandemic. I think that one of the things we're seeing is that in Canada, gas investment and gas spending will move before oil, largely because of the market access dynamics. Gas was not hit nearly as badly through the demand cycle, but also with the LNG projects coming on in the next couple of years. there will be a ramp up of activity associated, both drilling and completions activity all the way to midstream, and then any of the other activity that's associated with that activity, more heavily weighted towards the Alberta and BC gas businesses. On the oil sands side, I think what we're going to see is, again, a dichotomy of stories. The companies are going to demonstrate a lot more profitability. We're going to see a lot of fantastic results from free cash flow perspective, but it won't necessarily translate into new and massive increases in capital spending. We're also anticipating that with some of the announced consolidation, the continuing reduction in industry operating costs will continue. What it'll mean is a much stronger, more vibrant, more capable industry for the next decade. But what it does mean is on the near term, we're going to see results like the ones you see on this chart, which is a slow recovery through the next 3 years. I think we'll send it back to you.
Thanks, Bimal. So according to our projections, the net hiring requirements for Canada's oil and gas industry will be just over 19,800 jobs over the forecast period. 40% of those, or about 7,840, due to industry activity, and nearly 12,000 due to age-related attrition. By 2023, direct employment is forecast to reach nearly 176,000, as we saw on the previous chart. And that surpasses last year's employment levels, but falls short of 2019 employment by nearly 13,000 jobs. As Bimal mentioned, industry's employment this year is expected to be challenged by uncertainty of global economic recovery and energy demand. And capital spending is projected to increase slightly, but we don't anticipate employment recovering until 2022. The restructuring that started last year in the industry will continue into this year, resulting in a decrease of nearly 7,300 jobs. Many of those layoffs already occurred in the first quarter due to consolidation and mergers and acquisitions, and over the next 2 years, we are expecting hiring requirements look a little bit more promising. We're projecting net hiring of about 7,460 in 2022 and just over 15,600 in 2023, for a total of over 23,000 positions. Vacancies due to retirements are expected to account for a third, or just under 8,000 positions over these 2 years, while about 15,000 positions are forecast to be added due to increased investment and activity. We can move on to the next slide. Great. So these are the top occupations in demand over the next 3 years. And I'm not going to go through all of them, but I will touch on and highlight a few of them. Supervisory and management roles, especially in oil and gas services, are expected to be in demand due to age-related attrition and retiring of those positions. As with recovery from previous downturns, oil and gas services roles are expected to experience the most growth, primarily driven by LNG development, as well as oil and gas site reclamation programs. Petroleum and gas operators will be required to support natural gas field operations and processing. Geoscience and geoscience professionals and petroleum engineers, which were 2 occupations actually that were significantly impacted by industry restructuring and consolidation. We'll see increased hiring in those professions. Occupations supporting the structural and business model shifts are also forecast to be in demand, such as roles in regulatory, Indigenous engagement and partnership and stakeholder relations. And these include job titles such as environmental advisor, planner, or technician, Indigenous relations specialist, investor relations, as well as reclamation specialist. And finally, IT occupations will also be in demand as the industry increasingly uses digitization, automation, and data to improve productivity. These include roles such as automated systems technologist, database administrator, cybersecurity analyst, as well as technology architect. We can move along. So as the next decade unfolds, we are here are just a few of the trends to watch. In terms of an aging sector, workforce demographics are certainly a concern for the industry. As I talked about, based on annual age-related attrition rates, the oil and gas industry could lose up to 12,000 workers by the end of 2023. So in some cases, companies may not hire for the same occupations vacated by a retiring worker, but they might choose to bring in a different set of skills into their workforce. The greatest impacts of retirements are expected to be in oil and gas services, as well as parts of the exploration and production subsectors. And then for information on this aging sector and other factors affecting labor supply, I just wanted to point out that you can check out our spotlight. It's called Identifying and Addressing Labor Supply Gaps. And that's on our website. And Brianne will take us through some of the other resources on our website in just a moment. As we look at energy transition, as the industry looks to low carbon solutions and ways to diversify and expand beyond traditional areas, there will be new opportunities for workers in energy adjacent sectors, such as renewables, carbon capture, utilization and storage, as well as biofuels. For example, oil and gas drilling, completions, and well servicing expertise is also required for geothermal, hydrogen, and lithium development. Predictive maintenance talent is required for solar, wind, hydrogen, LNG, and biofuels. And emission measurement, reduction, and reporting are required for all forms of petrochemicals, manufacturing, biofuels, and LNG. And again, you can find more information. We've got 3 other spotlights that highlight LNG opportunities. We have another that highlights new technology opportunities. And the third is clean energy opportunities. I will pass it now over to Brianne to talk about non-traditional equity partners as well as remote work solutions. And then we'll move on to navigating our outlook online.
So in terms of non-traditional equity partners, we have seen an increase in some innovative business arrangements in the past few years, such as Indigenous communities having equity stakes in projects, and they seem to be gaining some traction. In December, PetroLMI released a report titled Going Beyond, Supporting Indigenous Employment in Canada's Oil and Gas Industry Through a Pandemic and Economic Challenges. It's a little bit of a mouthful, but the report does include opportunities to support Indigenous entrepreneurship, as well as best practices and ways to overcome hiring barriers. So I do recommend you take a look at that report. And then in terms of remote work solutions, the work from home shift that happened as a result of COVID-19 is likely here to stay in some capacity and may change what attraction and retention practices are required and what skills are needed going forward. We produced a 4-part series in the fall, actually with Bimal and his team, on the impact of COVID-19 on Canada's energy workforce. And part 1 focused on the labor cost reductions and productivity. Part 2 focused on work practices and productivity skills. And then part 3 focused on the opportunities, challenges, skills, and training. And part 4 highlighted specifically unemployed and temporarily furloughed workers. So I do invite you to check out that series as well, as I do think a lot of the information that we covered in that series applies to the remote work solutions going forward and the skills that will be in demand. And as Lisette said, I will now take us over to the actual web tool itself. So we have revamped our web tool to include a few more features this year. You will see there's a little bit of information about what the kind of setting is, a little bit of an introduction here with a link here to download more information about the modeling system that I discussed and the methodology that we use. You can scroll down to see overall oil and gas employment and those numbers that Lisette shared in her part of the presentation today. And on the right-hand side here, you can take a look at the overall net hiring requirements by year by subsector. And you can break this down to include or not include any of the subsectors you're interested in seeing more about. Once you scroll further, you will see the net hiring requirements, which will be part of tomorrow's webinar. But I did want to just show you briefly that you can sort this information by subsector and by region. And doing that will change not only the content on the right-hand side here, but also the content on the left that's supporting it. At the bottom of the page here is where you get all of the information. So in this big chart, you're able to sort by region or by subsector and then by occupation. So you can pull whatever you're interested in seeing or hearing about, and you can download the data that's of importance to you by occupation, as I said. And on the right-hand side here is the top 15 most impacted, or top 15 occupations with the most hiring requirements between 2021 and 2023. And you can also sort this by subsector, and it will tell you how many people are required in each of those occupations. As Lisette mentioned, we did do a series of spotlights this year, and we do have a summary report. So if you prefer to look at a PDF version or print it yourself, you can definitely do this, and it will provide you a high-level overview of the content here. I did want to click through to the spotlights here that Lisette mentioned. And you will find here, there are 5 different spotlights that outline different information like the technology that Lisette mentioned. We will be talking a little bit about the labor supply gaps tomorrow, but we did try to make all of the information as online and available as possible this year. So hopefully you will find some value in navigating that section of the website. So I will bring us back to the PowerPoint here, and we can open it up for questions. I don't know if anybody has any. If you found today's session valuable, I will launch our second poll here, just letting us know if you found the content and information beneficial. But we're happy to answer questions about anything that came up. So it looks like we have a couple people who are unsure. If we can answer a question or provide you a little bit more information, we're happy to do so. That we want to make sure that the content that we're sharing is beneficial to you. The quietest webinar group I've ever presented to, I think. You guys are awfully quiet for a Monday afternoon. So do we identify employment projections based on NOC? So yes, we have a list of, I want to say 67 Is that right, Lisette? National occupation classification codes that we base our direct employment numbers off of. These 67 occupations end up representing 75%-ish of the industry. Is that right too? Oh, look at me. And so we lump in the other occupations in an other category. But that is how that table at the bottom that I showed on our website works, is you can look at each national occupation classification that we provide an employment projection for. And do we include information for Newfoundland? So we will be talking more in tomorrow's webinar about the breakdown of outlook based on region. So as you saw maybe in the tool, we break it down by Alberta, BC, Saskatchewan, and rest of Canada. And that's basically just because the employment numbers are smaller across the rest of Canada, that it's a lot harder for us to break it out into individual provinces and regions. But yes, the outlook does include information for Newfoundland. If no one else has any other questions, we will give you back over half an hour of your time today. Oh, question here. How much do we project oil and gas? Will people into the tech sector? I'm not sure I understand the question. How much do you project that oil and gas will people to tech sector, considering that recovery will happen in 2023? Maybe how many people do we think are going to leave the industry? Is that maybe the question?
Well, there might be a couple layers to this. One might be the leaving of the industry, which I guess that's the yes. And then the other piece of it is actual tech roles within the oil and gas sector. And that might be the two angles to take, Brianne.
So I think in terms of people leaving the industry, we have already seen, and we will talk about this a little bit more tomorrow as we get into some of the labor supply information, but we have seen people not as attracted to the industry as we have in the past, specifically in the services sector, where the stability of employment is up and down, even with spring breakup. So we are definitely seeing people considering other industries more so than they did in the past. But the tech sector specifically, it's a bit mixed. I think it's getting a lot of media attention these days. And I think in terms of some of the engineering disciplines, some of the technology, like technologists and technician roles, definitely are easily transferable to some of the higher tech areas. But there's still a lot of workers who don't fit in those two categories, and workers who are not that keen to take on technology. So we do think that digitization, as Lisette mentioned, is impacting the industry. There are IT roles within the industry, but there are also a number of roles where you're not necessarily going to be required to be a technologist or understand the ins and outs of data. You are going to be expected to work with data and use data in your day-to-day roles. But I'm not sure we're going to see a mass exit to a tech sector at this point. I don't know if anyone else has anything to add there, Lisette and Bimal.
Absolutely. I think, as you had mentioned, that workers will be required to kind of ramp up their technology knowledge in terms of analytical skills. And so I think that technology will impact almost every occupation going forward. And those types of skills are definitely going to be in demand.
Yeah.
And I think the only other thing I would add on this, in some of the conversations we've had, has been, this forecast has been very focused on establishing boundaries around the oil and gas industries and direct service providers to the industry. There's robust growth in supporting the energy sector from a technology perspective, and many of the major tech firms whose jobs would not be counted in the survey, for example, an IBM or a Microsoft or an AWS choosing to support clients, they're doing that locally, and they're doing that to help support clients as they go through their technology transformations. And it wouldn't necessarily be counted in these numbers, but a lot of folks who have oil and gas experience will land over there ultimately to support their clients in the sector.
Yes, that is definitely a good point as well. As I said, direct employment only includes those people working directly for the exploration and production companies, the oil sands companies, and the services companies. So as Bimo mentioned, if a company is hiring out some of that, at least the initial development of tech, those workers are not counted in our overall numbers. We got another question here. What are some of the challenges facing employers as the global pandemic continues to restrict activities? And so I think going back to our COVID-19 series that we did in the fall, we did find most companies were able to adapt to working remotely quite seamlessly. It was a bit of a surprise, I think, for most companies that they were able to do that without much of a hiccup at all. I think ongoing, there have been some adjustments to shift work where in-person workers are required, so at facilities and such. But overall, I'm not sure that there are a lot of that there are many challenges with getting the work done. The challenges may come from people expecting the flexibility in work location going forward. They may come in the forms of companies' real estate footprints. I know we talked a lot about that, especially in Calgary here. There's a lot of office space not really being used, and expensive office space. So I think there's some longer term business structure decisions that will be made. I don't know if there's anything else that you guys would like to add to that.
I think too, in terms of labor supply, and we'll talk about this a little bit more tomorrow, but the mobility of people across the country, of workers being able to come across the country, as well as international students and students choosing, the petroleum stream in engineering, those definitely are causing some labor supply issues, and those I think are directly COVID has directly impacted those people, and we certainly will talk about that tomorrow as well.
Yeah. The only addition I would give is more, I think if we look at the near term, the next 3 to 6 months, there's still a lot of complexity and ambiguity that companies are faced with respect to how do you bring people back to work? Do you have to wait till everyone's vaccinated? Do you have to wait till a certain percentage? Do you need to have a vaccine passport to get back in the office? What's fair? What works for people? What's good for the business? I think these things are issues that are not just issues for the oil and gas business, but it's I would say worldwide, that the exact mechanism by which they're going to be opening things up and letting people back into the office are not completely quite known. And even if you think about some of the buildings downtown, if you start doing the math on, you can only allow 3 people into the elevator and you've got 20-story building, how long is it going to get to fill the building and empty it out when you're still in standard protocols? And any of you who have been to the plus 15 during normal working weeks and business hours know how crowded those elevators can get at noon, and when people are trying to get down for lunch. So I think we haven't quite wrestled with all of those issues, and it's not just a Calgary or Canada issue, it's everywhere. And I think that's going to be one of the things that's probably going to be a lot of, as we start to hit a critical mass of people being vaccinated, I think you're going to see a lot more dialogue on that topic through Q2 and Q3.
Yep, that is a good point. So I don't know if there are any other questions? It doesn't look like it. I'll give you an extra minute or so in case something comes up. But if not, thank you so much for joining us today. And I hope that we'll see some of you join the call again tomorrow as we get into some of the details by subsector and by region. And otherwise, have a great afternoon and thank you again.
Bye, everyone.
Thank
Bye.
you.